Ladies and gentlemen, the Impact Summit in Budapest continues with a panel discussion titled Financial Inclusion, How to Build a Digital Ecosystem. And as the title suggests, its central question is how digitalization can accelerate financial inclusion and what specific challenges COVID-19 has brought about in this area. Joining me on this virtual stage as the moderator of this session is Ms. Tram Nguyen, the co-founder of CFTE, the Centre for Finance, Technology and Entrepreneurship, one of the fastest growing learning and innovation platforms in FinTech and in digital finance. Tram is an advocate of lifelong learning and continuous education as the best tool to help organizations and people adapt to a fast-changing world. She is passionate about upskilling and providing more opportunities to professionals in finance, as well as providing women and individuals from diverse backgrounds with a voice. Tram, the floor is yours to introduce your panel.
Thanks very much. Thanks very much, and good afternoon, good evening, good afternoon from London, good evening from Vietnam, and good hello for everyone. First, before we start, let me congratulate Magyar Nemzeti Bank, the Central Bank of Hungary, and MSFO for a very special moment. I would like to share how honored we are today to be part of this event. Thank you for this great opportunity to join this event, and thank you for the great partnership. Let me welcome our four speakers. We'll be discussing about financial inclusion and how to build a digital ecosystem. I would like to welcome first Ronit, Global Sector Head for Bank Research, co-head of the FinTech Group and head of MENA Research for Citi. Ronit is the lead author for Citi's GPS Bank of the Future and FinTech report from Dubai. He is also an advisory board of CFTE. I would like to very welcome Ms. Anikó Szombati as well. Thanks very much, Anikó, for organizing this event and being part of this panel. Anikó is the Chief Digital Officer, Executive Director for Digitalization and FinTech Development, and member of the Financial Stability Council of Magyar Nemzeti Bank, the Central Bank of Hungary. Anikó's main responsibility is to promote digital transformation in the financial sector, as well as within the central bank, including the implementation of cutting-edge technologies and supporting the FinTech ecosystem. I'm also very happy to welcome Ms. Lesley-Ann Vaughan, Director of Product Strategy of Mojaloop Foundation. Lesley-Ann has been working in emerging market digital financial services innovation since 2005. She was part of the founding team behind M-Pesa. In recent years, she has worked as a freelance consultant for various organizations involving in the Bill and Melinda Gates Foundation, consulting group to assist the poor, and IIC, Microsoft, and MasterCard. And I'm very honored also to welcome Manisha Shah. Manisha is the CFO of MoMo, Vietnam's leading e-wallet company. As part of the senior management team, her responsibilities include the finance, human resources, capital raising, and investor relation. And today, we'll start with the panel discussion on financial inclusion. So let me start with the first topic about the relevance of financial inclusion in your various, current position. And perhaps I will start with Ronit. And Ronit, in a recent study with the Banking the Next Billion, the report that you produce, Citi estimates that financial inclusion will grow in a big way. Ronit, in your opinion, what are the drivers of this growth, and what are the other main conclusions of the study?
Sure. Thank you for your very kind introduction, Tram. A figure that most people are aware of is 1.7 billion. That's the number that's often quoted about the excluded, the unbanked. The 1.7 billion number comes from a World Bank report in 2018, referring to data in 2017. That number, if you went back to 2014, was about 2 billion. Now, we estimated in the report you mentioned, Tram, that we estimated that number would fall further. We thought that by 2022, the number would be closer to 1 billion. So the first point I want to make is that we've lived through an amazing period of inclusion or growth in financial penetration, financial inclusion. And this is important, not just because we want everyone to have a bank account, it's important from a social welfare perspective. Financial inclusion allows better economic growth. It allows, particularly in the lower part of the pyramid, for people to be able to build businesses, get some more security, and access potentially savings and credit. So
Thanks.
the numbers are growing. It's important that it's growing.
Thanks, Ronit. Lesley-Ann, Mojaloop Foundation's mission is to increase financial inclusion by empowering organizations, creating payment system to enable digital financial services for all. Lesley-Ann, what's the role of Mojaloop and how can you increase financial inclusion? And perhaps what are the challenges for creating these payments and the challenges that you see for the different payments model?
Thanks, Tram. So I start the story with M-Pesa because it's a big part of my story in the background. M-Pesa is a big part of the financial inclusion story globally. It created an industry around it. And the reality is that 50% of the world's population are offline. And M-Pesa solves the problem of giving people back their time. The agent network is fundamental, as well as enablement of feature phone payment enablement, not smartphones. But obviously they're moving into smartphones now as well. So that moment when mobile money customers need to interact with the traditional banking infrastructure, it's often enabled by bilateral connections, deals, and interconnection. And that works well to start with. So that is the story of Mshwari that we heard from Bob in the early connection. What Mshwari led to is a Kenya loans and saving marketplace that connected M-Pesa to all of the banks in Kenya. But the reality is that to make this happen at scale everywhere else with other markets, bilateral deals and technology enablement has the potential to be very inefficient. Often consumer protection will suffer when things go wrong. Issues can take days to fix. And in the meantime, a low-income customer is suffering from their money being completely inaccessible. And there's also a reason to have credit bureaus in the conversation. Something like a Mshwari, if you're not thinking about how much credit someone is having. And then often when we talk about payment switches, entities such as microfinance organizations, SACCOs, and mobile money operators are not part of the conversation. And yet they're vital in bringing services to the last mile. So Modulate Foundation is a new foundation that was founded this year. It's to support the long-range development and enhancement of some open source software that is a real-time push payments enablement model that enables non-bank and bank players to collaborate together with an interconnect API that's been designed for the fact that we've got different KYC tiers and different decisions have to be made at the point of the transaction. It also focuses on removing uncertainty and reconciliations of manual transactions. We've got a mindset of co-creation on shared services enablement in the co-opetition space. We focus on Rails enablement, and we use cryptographic controls using the interledger protocol to avoid repudiation of transfers and ensure that clearing is final, so that the money doesn't get stuck when it comes to customer funds. We focus on an asynchronous design that helps deal with the network realities of emerging markets. We know that networks are not that stable. And so we hope at the back of our design decisions that we've actually created something that is very useful to players in emerging markets who want to create interconnect between different systems in a reliable way that works for financial inclusion ecosystem. We have partners in the foundation, for example, from Google through to Gates Foundation. Both public, private, and donor sector are a big part of the conversation.
Thanks. Manisha, we hear, a lot about MoMo, and please, can you tell us, about the organization and perhaps how MoMo is supporting financial inclusion in Vietnam, and how have you developed with the current pandemic?
Sure. Thanks, Shanhan. It's a pleasure to be on this panel today. So MoMo is the largest e-wallet platform in Vietnam. Today, we have 20 million users and over 25,000 merchants and an Asian network that Leslie was talking about across the country. MoMo was founded, today people talk a lot about e-wallets and unicorns and FinTech, but MoMo was founded in 2007 when they saw the story of M-Pesa. It was founded with a single, it's called, MoMo means mobile money. It was founded with the vision of using the mobile phone to improve financial inclusion and provide more financial services to Vietnamese people, to ordinary Vietnamese people. And that remains the goal of the business today. We moved, as Lesley was also, referencing, from feature phones to smartphones very early. We moved about 2015, when we saw that actually that's where the users in Vietnam were moving. And, so we have now e-wallet app. So in terms of financial inclusion, look, in Vietnam, we have a rule that all the bank accounts have to be linked, e-wallets have to be linked to bank accounts. So in that way, we are at the moment limited to the world of people that have bank accounts. However, I think it's important to note that a lot of the people that have bank accounts in our country, they are underbanked. So just because you have a bank account doesn't mean you actually have access to a broad suite of financial services or that you can use it. So we start with going with banked customers, helping underbanked users get online, have better access to their money, use that money for a broad array of services, everything from sending money to people to buying insurance, paying for hospital or school bills, etc. And we also started working, more recently during COVID, the eKYC rule was passed by the government, and that's forming a basis of what we hope will be our opportunity to work with banks to bring the other 70% of Vietnamese people that don't have bank accounts online. And we believe that the mobile channel is ideal to do that with.
Thanks. I would like to ask Anikó for further her views, but certainly not least, we have also, the views from the central bank. And Anikó, what is the role of central banks in increasing financial inclusion? And what are the main challenges you see regulators, especially, the Central Bank of Hungary, face today?
Thank you, Tram. Actually, the role of central banks as issuers of legal tender and overseers of payment system stability is twofold. First, they have to ensure that in any chosen form, payments are transacted smoothly, safe, and secure. On the other hand, in terms of financial inclusion, they also have the role to promote as to more and more people should have access to modern, safe, and affordable financial services that best serve their personal economic goals. And connected to Manisha, I would also underline that having a bank account itself is not enough. Based on a recent OECD study just published this summer, for example, in Hungary, the average financial knowledge is satisfactory. However, the implementation capacity is below average, meaning that in real life situations, people are not making financial planning or saving decisions, or at least not making it consciously. So on top of that, the digital skills and the utilization in complex financial decisions are also interrelated, meaning that when these decisions are made, people with most advanced financial knowledge are making the decision based on information from the digital channels. So not only financial, but digital literacy have to be improved as well.
Yes, no, thanks, Anikó. And that's, go back to my second topic, which is how can digitalization speed up financial inclusion? I will ask, all of you, to share about what you see from the opportunities and the challenges. And as, Anikó, you mentioned about, improving the literacy. Can you continue talking with Anikó, the modern world requires modern tools, as you say, to improve financial inclusion. In what unique ways intend the central bank improve financial literacy of specific customer group? Could you share more about why have you chosen the 8-14 age group to target, and why your initiative is so unique?
Thank you. So we just launched our central bank one-of-a-kind free mobile app aiming 8 to 14 years old school students. And our aim was to establish those financial behaviors that can be adopted also in the early age, the regular saving habits and setting financial goals. And on top of that, with the help of the constantly renewing quizzes, we also help children and families to acquire up-to-date financial, sustainability, and digital skills. So how the application is working? Actually, first, children has to set up a financial goal, a saving goal. They can pick up savings targets from a catalog containing toys, little gadgets, and so on. And when they are successfully answering the quizzes that are constantly renewed, they can randomly earn digital medals. These medals are forming series, for example, based on famous Hungarian kings or castles. So these have to be collected, and for the collection, they have to exchange with each other. The exchange is facilitated by QR code generation. And at the end of the savings period, they can collect the earned presents by making a purchase in a special web shop, and these presents will be delivered to their own schools. We picked up this age group especially because this is the first period when children already have some pocket money, so they have some spending, but this spending is taking place exclusively in cash. While, on the other hand, most of these children already have smartphones, but they are legally deprived of having their own bank cards.
Very great initiative. No, thanks. Ronit, you are in the Middle East. You see a lot around the world, but you're also, in the Middle East today. And how, in your point of view, how can digitalization speed up financial inclusion? What digital financial services do you think can reach really poor people first? And are fintechs really able to bridge the current gaps in terms of access and minimum balances that keep entire region currently away from financial services? Why are the same problems present in more advanced economies as well? Could you please share with us?
Sure. So one of the problems you have is access to formal bank accounts. So digital wallets, mobile wallets become really important simply to provide security and moving money around. Lesley-Ann will obviously know this much better than me, and probably Manisha as well, but MNOs, telecom companies, play a very important role and have done for the last 15 years in the region, particularly in East Africa, and just getting money around. So for me, the first use case that digital sort of broadly defined provides is moving cash safely and cheaply, rather than paying an intermediary, running the risk with the proverbial bus driver. Just moving money is the first advantage. The second one is, and this is where maybe more recent fintechs come in, is the idea of fractionalization. Because one of the challenges you have if you're a lower income worker or even a young person in an advanced society like the US or Europe is being able to access instruments or assets that have high denomination values. You want to buy one share of ABC company, or you want to buy even one government bond, right? There's usually the safest asset in your country, a risk-free asset. To buy one government bond in an African or Middle Eastern country could be very expensive. You may not have the money, but fintechs can fractionalize that or sachetize it such as I can't even pronounce the word, and that becomes a real advantage, whether it's in emerging markets or in developed markets.
Yeah, no, thanks, Ronit. Manisha, you are in Vietnam. You see a lot from Asia and Vietnam perspective. Could you specify the stage of MoMo and what's the speed of financial inclusion? Perhaps what can you share the challenges that you face in Vietnam and what can we learn and leverage to other countries?
Sure. It's hard for me to define where we are in terms of financial inclusion. As I said to you a little bit before, we're at about 30% of Vietnamese people have bank accounts. Of that, people who actively use banks, 30% have about bank accounts. Credit card penetration is 5% or under. So I would say we are still at the earlier stages. I think there is a very, very strong directive from both the government as well as the State Bank of Vietnam to promote digital payments. There's a strong focus on that. The government and the regulators are simultaneously very cautious because they want to protect the individuals from fraud. So, if you think from the central bank perspective, they are trying to manage both those things. They want to promote digital payments. They want to promote, more bank penetration. They want to control the risk of people losing assets. So I think that's sort of, broadly the macro environment in Vietnam. I think that the way to increase financial inclusion in Vietnam, what I have learned is that you don't think about it as a game for fintechs or banks or regulators or somebody else. You think of it as something that you have to do together. So MoMo is a platform business. It has access very easily to millions of customers, access to merchants. But we need banks, but we need the regulator and the government. So I think what I have learned in Vietnam is that it is critical that you work with all old economy, new economy, state regulators together. And without doing that effectively, you cannot solve the challenge of financial inclusion. We see a lot of press that, the fintech is going to do everything, cannot do it alone. That I think is personally my biggest lesson. And I think usually everyone is aligned to increase financial inclusion. They just have maybe different problems that they are trying to solve at the same time. And if you understand those problems, you speed up the trajectory of inclusion.
Yeah, no, thanks, Manisha. Lesley, coming to the topic of how can digitalization speed up financial inclusion, what do you see as the opportunities and the challenges? Can you share, why is it important that Mojaloop is open source, and what other technology features can give major inputs to the spread of these digital payments? Even in extremely low income region, what's your view on this?
So I want to amplify what Manisha just said. Really, we will get financial inclusion when we get more collaboration, and actually we can sit in a room and we can talk for days and weeks and months and years and still not have something actually in the hands of users. So the moment of having an open source code base as a collaboration point is a way for us to actually move the conversation forwards, accelerate it through examples, and to really start to understand each other from different perspectives and try things. So a big part of the benefits of open source is that moment of a co-creation environment, to apply the approach to regulation innovation, to have public and private collaboration through the concept of rules as code and regulation as code. I think it can be very effective in moving the conversation forward. For example, around privacy by design, shared and fraud risk management services, RegTech, SupTech, in the context of financial inclusion realities. Let's bring those realities to the table. There's a newly launched Digital Public Good Alliance. It's actively sourcing open source initiatives in parallel industries as well as us at the Modulate Foundation. So there's a movement, MOSIP are in the identity space, and it's based out of individuals from the Aadhaar India stack. There's OpenG2P that came out of the Ebola crisis, and beneficiary management, those kind of things. And what we want to do is actually figure out how to put these systems together in an open source collaborative way and actually move the conversation forwards. Because if we support the superheroes at the front line with really good software, they can actually design the business models that can create a sustainable environment.
Thanks, Lucy. I want to move now the conversation and the topic to the long-term impacts of COVID-19 on financial inclusion, and ask all of you to share your views. Lesley, you can, you started. Perhaps I will leave you to continue about, perhaps, sharing about the situation that you see with your work that you do. Perhaps talking about the government support. What are the government support to speed up, all this development?
So I can really echo what Bob said in his keynote. COVID-19 has brought an imperative to act. Government and donor agencies this summer have been talking about the need to accelerate our digital, our sustainable development goals. 2030 is too late. We have to move faster. And the conversation has really changed globally through COVID-19. It was clear how markets with robust digital payments infrastructure could mobilize support in a more efficient way. And therefore, the conversation around digital public goods has been accelerated as part of that. But we've also seen in the last mile, public and private collaboration in a speeded up. In Kenya, M-Pesa reduced the fees for payments, and this has accelerated the growth of digital usage massively. But we've also heard a lot about the missing middle. Those who aren't employed or part of hunger safety net programs, gig workers, their income has dropped through the floor as the work has stopped. And there has been an increase, therefore, almost in the digital divide over the last few months. When you used to earn $80 a month and now you earn $16 because the work has dried up, you stop buying data for your phone, you stop charging it, and you think hard about what bills are important to pay. And as well in this story, agents have proved themselves to be vital because they are actually in the last mile already. So, for example, we've got a UNCDF-led project in Myanmar, which is helping MFIs interact with mobile money agents to get loan repayments facilitated by digital rails. So I think it's really changed the dynamic of the conversation, and the spirit of collaboration and co-opetition seems to be strong.
Thanks. Ronit, moving it to you. What's your view? I mean, according to the 2020 Global COVID-19 FinTech Regulatory Rapid Assessment Study, regulators in emerging markets and developing economies are more likely to have reported increases in the usage of digital payments and digital banks. On the other hand, respondents see rising risk in the FinTech market concerning cybersecurity, operational risk, consumer protection, and fraud and scams. Ronit, do you see any connections in between the two trends? And are there any special programs around to protect the most vulnerable from cybercrime?
Sure. I think the first part of your question's easier to deal with. The connection is a bit harder. So the first part of the question, the reason that emerging market regulators, policymakers, companies will have seen a bigger impact during COVID is simply there are bigger problems to solve. Oftentimes I get asked a broader question, which is, why have China or Kenya or Southeast Asia or India seen so much more quote unquote innovation in FinTech? And the answer is always the problems are so much bigger. Manisha threw out a number of 30% banked in Vietnam. In the UK or the US, yes, there's a 5-10% missing, and that's important, but it's not 70%. Or that would have been similar in India pre-Aadhaar and pre the sort of light banking accounts that have come in. So it's just the size of the problem. Now, during COVID, we've seen this in the Middle East as well. What you've seen is it's not just the base of the pyramid. Oftentimes, like next door, I mean, I'm in the UAE, but next door in Saudi Arabia, middle economy was very cash-based. Cards were used to take money out of ATMs. Now, what happened during COVID is that the government said, no, you've got to accept electronic payments. And so signs went up everywhere saying it was either encouraged or in some cases mandatory to pay with the card. So a lot of people have cards in the middle of the economy, just wouldn't use it. In the base of the economy, what you've seen, and this is before COVID, but COVID's accelerated it, whether it's wallet usage, sort of electronic or digital solutions, those have really grown fast. I mean, I was talking to a couple of FinTech founders in Lagos, Nigeria, just last week, and they were talking about every month they saw month-on-month growth and year-on-year growth, but every month they saw maybe 1 month, like when the lockdown first hit, they went down. But apart from that, every month they saw an increase. So it's, whether it's in Saudi Arabia, whether it's Nigeria, you're seeing COVID is massive accelerator. COVID's done more than any CTO could have done or any policymaker could have done to push digitization.
Yeah. Manisha, your view on the long-term impact of COVID-19. What have you learned from the situation?
Sure. I echo what Ronit says. COVID it has been a game changer for electronic payments. Our experience in Vietnam is a little bit different. Vietnam, the government, they acted very early, so we were very fortunate. We had a couple of lockdowns, but not many cases. Life is pretty normal here. And so you didn't see the kind of force to electronic digital payments that you saw, for example, in the Philippines, or as Ronit was saying, in Saudi Arabia. What we saw two things which we think are even more important than a quick increase in peer-to-peer payments. We saw a huge mindset shift, and I'm not talking about just from the users or our users. Our users changed too, but the change from some of the largest government-owned supermarkets, the large offline players, to switch to online, the urgency for them to realize that if there was a long-term lockdown, they didn't actually have a way to sell products. They didn't have a way to reach their users. That was huge. So I think that made us start to build use cases for supermarkets, for offline to online, things that we hadn't anticipated doing before the next 3 to 4 years. So all of that was accelerated. Our users, of course, increased their propensity to pay, which is kind of expected and accelerated. We also saw that the government pushed through a few big things. One of the big regulations that they passed was what is called eKYC, which means that we can work with a bank and somebody can get eKYC'd on the phone. That will enable banks. So the retail branch penetration in Vietnam is lower than it is in India or China. So there is a challenge that how do you reach the people who want to have bank accounts? It's very expensive to go to tier 2, 3, 4 cities or small villages to reach the customer. It's not very expensive when you do it on the phone. So we think the combination of eKYC, the mindset shift, will all accelerate the move to mobile. And you see a little bit the trajectory, the number of transactions now, but I think the impact in 3 years will be game changing.
Thanks. Anikó, to you, and I have this question about what are the major trends the central bank has discovered due to the lockdown in people using digital financial services? And my question would be, were there any improvement in Hungary in the take-up of the digital financial services? Are there any central bank initiatives to support and possibly maintain these positive developments?
So actually, the pandemic has changed the people's attitude towards cashless payments also in Hungary. So more than 1/5 of the population has been using electronic payments more often in this period, and we do hope that this trend will continue. On top of that, the openness to digital banking has also increased significantly. So in 2018, only 45% of the bank customers were open for managing their finances via either mobile phone or via net bank. And this number has surpassed 80% in the middle of this year. That means that people are getting used to these digital channels and have trust in all these. But Still, there are other opportunities for the service providers to offer fully digital financial products and services, as, for example, the account opening and personal loan market is the most advanced in terms of digital banking, and only 60% of the market supply is accessible via digital channels. In terms of central bank initiatives, I would highlight the introduction of the instant payment system, which went live in a quite timely period at the beginning of March. And since this was the only system that obliged all the banks to participate, actually it was a game changer in Hungary, and we do hope that the payment market and also the economy's competitiveness will increase in the medium run significantly due to these possibilities. So based on this network, the money can move from account to account in seconds, actually on average in 2 seconds, on a 24/7 availability. This means that customers have the choice to rely on electronic payments in more and more real-life situation, and this can increase the access to electronic payments, not only to the customers, but family businesses and SMEs as well. And also in the upcoming weeks, the central bank itself will introduce a chatbot function to improve the customer protection function. So the chatbot, relying on artificial intelligence, will be able to talk to the customers to increase their financial knowledge, the awareness of the risk and the special characteristics of the financial products. And we do hope that we will be able to come up with other new technical and financial innovative projects soon as well.
Thanks, Anikó. I think the topic is it's very big, and I know that we as a closing, I just want to say that COVID-19 brought us several changes in digital financial services, and I would love to get all of you. I know that the central bank is doing quite a lot, and it shows that it will last. It shows that you have established, and we hope that it will last for the good stone for have a sustainability in this. Can I ask you, all of you, in 1 minute, to tell us, do you think these changes, especially the benefit, will be long-lasting? Furthermore, how do you see financial inclusion in the 5-10-year perspective? What are the main challenges we have to overcome to improve it? In 1 minute, what would be your closing for all of you? So perhaps I will start with Ronit, Lesley, Manisha, and Anikó. You've mentioned all of the great initiative by the central bank. Ronit. We can't hear you.
In closing, I'll make 2 comments, one quantitative and one qualitative. On the quantitative side, I already said earlier, we thought that the amount of unbanked population would go down to 1 billion. Roll that forward, you're going to be looking at a few 100 million. So the quantitative problem in 5 or 10 years will have been solved. The qualitative problem is still work in progress, and that's about taking the full range of financial services to the population. And that's going to be the really interesting development that we're going to be watching.
Thanks, Ronit. Lesley.
2 things as well. 50% of the world's population are offline, and just like Bob said, when they come online, it doesn't mean that they're smartphone literate. So we've got to remember the digital divide in our conversations, and that cash is king for a lot of people. And the second one,
Lesley, I have to the floor. Can you share with us your closing?
It's the second one.
Manisha.
Okay. Yeah, I have to echo. I think COVID has been a game changer. So I think that in the next 10 years, you will see a disproportionate amount of people moving offline. I believe cash is king today. I believe in 5 to 10 years, it will not be king in most economies, including emerging markets, because of the advent of the mobile phone. It will democratize payments. I think the onus is on a combination of the service providers and the regulators to make sure that this is done in a way that is fair to all parties in the ecosystem, particularly the less educated user. I think that if you can do that safely and securely to the last mile user, the one that is less educated or has less money, that is when the financial inclusion finally succeeds.
Thank you very much, Anikó. Thank you, Manisha, Leslie, Ronit, for this very interesting panel discussion. Thank you very much for listening. It's an important topic. Looking forward to seeing more interesting development in financial inclusion. And I wish you a great continuation of the session. Thank you.
Thank you.
Bye-bye.
Thank you, Tram, and all the members of the panel for this truly wide-reaching discussion.